Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this pair, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant level of previous monthly support, which is now turned resistance. In fact, from here, this previous move to the upside was created, and at the moment the market is already respecting this previous support and resistance by testing it here. However, at the same time, from a pattern standpoint, we must notice that we do have an impulse to the upside followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market is currently rejecting this support and demand area, which is in between the 0.618 and 0.786 Fibonacci retracements. And as it is rejecting this level to the upside, we could expect more potential bullish continuation away from that zone. Going down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how we have a market which is currently testing previous weekly resistance, which is now turned support here. As we're testing previous resistance turned support, we could expect more bullish continuation away from the zone, potentially also with the creation of a new weekly higher high. Now, generally speaking, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how at the moment the market is moving step by step. We just had the test of the 0.618 retracement. Currently, the market is testing the 0.382, from which bullish continuation could be expected. At that point, if from here we get bullish continuation, we would also see a break above the monthly resistance that we have previously identified. Dropping down the daily, what do we see? Now, here on the daily, first of all, I did speak about EURUSD a few days ago when the market was here. I explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, it is also important to point out that at the moment, all this area is currently resistance. This is previous daily resistance, which until the market will remain below it, this market could easily reject to the downside. So what we would need in order for this market to continue higher, breaking above the resistance levels that we have on the monthly, is to create a daily close above this level of resistance, because after the break, on the retest of this previous resistance turn support, this is where we could have institutional buying. And only if we get institutional buying, only at that point the market can have the power to breach that resistance zone. Now, why do I say institutional buying? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the AUD, we can see that with the last report, we don't see any kind of institutional buying yet. We actually see longs getting closed. At the same time, shorts as well are getting closed. This means that at least at the moment, institutions are not interested in shorting AUDUSD, because otherwise they would be adding shorts, not closing them. So this means that if we do get a break above this resistance on the retest, at that point we could start to see institutional longs added and shorts to continue to get closed. That would further increase the probabilities of getting a rejection away from the zone. So it is definitely something to pay attention to. So if we do get the breakup of this resistance on the retest of this previous resistance turn support, how we could be approaching a potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, these are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97, one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll over here, you can see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is a button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.